Hi friends, welcome to Diploma in IFRS and Strategic Business Reporting paper for ACCA. My name is Pavan Kumar. I am a qualified chartered accountant and also a qualified cost accountant. And I am trained in IFRS through Ernst & Young. So I have been into teaching for various levels of accounting paper for CA, CMA and ACCA papers. So today we are going to start the session with IAS 16, which is named as Property, Plant and Equipment. So there are two items in the heading. There are no three items. It is not property, plant and equipment, three items. Normally, do you remember in your plus 1, plus 2 or in your BCom in the earlier stages, you used to use one phrase together, plant and machinery. So plant and machinery is a single item, right? Same thing here. Instead of plant and machinery, you are using plant and equipment now. Now, what is property? Property in general means land and building. Property in general means land and building. What is this plant and equipment? All the types of machinery, including you call it computers, furniture, chairs, factories, okay, equipment, then motor vehicles, earth moving equipments. You have bulldozers, you have recliners, you have lift, you have escalators. Okay, you have conveyor belts, or you have some machines which carry goods, etc. All these things put together we call plant and equipment. And for this property, plant and equipment, which is a global nomenclature, we have one nickname. What is that nickname? Fixed assets. So this property, plant and equipment, we call it fixed assets. Okay, but globally we call them non-current assets. There is a difference because non-current asset can be both tangible and intangible, but property, plant and equipment can only be tangible. So in today's lecture, we are going to discuss what is property, plant and equipment, what is the definition, what is the scope of IAS 16, when can I recognize an item as asset in my books of account, how depreciation is to be charged, what are the rules for measurement, what are the rules for subsequent measurement, how to provide depreciation amortization, how to present assets in the balance sheet, which we call statement of financial position, SFP we call statement of financial position. And this amortization part goes to statement of P&L, SOPL we call statement of profit and loss is nothing but income statement. Okay, so if you are a student who is doing SBR, you might have completed this in F7 financial reporting. If you are a qualified chartered accountant, cost accountant, this is a cakewalk for you. You might have studied this long back. Even if you are a BCom graduate doing diploma in IFRS also, you might have seen accounting for fixed assets and all these things, depreciation in your plus 1, plus 2 basics. We will take it little next level, little advanced. I will not say a very complex level, but rather it is a little above to whatever you have learned basics in your plus 1, plus 2, BCom, etc. Okay, now tell me one thing. If I have a car, what is the asset I have? I have car. Now you tell me whether car is a fixed asset or car is a current asset. If it is fixed asset, we call it property, plant and equipment. Whether car is a fixed asset or current asset. And I have one computer here, I have one camera here, I have one mic set here, I have some equipment here. Okay, or I have one building in which I am taking this class and all. So all these things, this building or this cameras or this desktop or laptop or writing board or stylus, all these things, furniture, the chair I am sitting, the table I am using, whether all these things are fixed assets or no. Remember one thing, the classification of asset into current asset and non-current asset, classification of asset into current asset and non-current asset never depends on the nature of the asset. Building, fixed asset, wrong. Building, fixed asset, wrong. Motor vehicle, fixed asset, wrong. Machinery, fixed asset, wrong. Table, fixed asset, wrong. Mic set, fixed asset, wrong. Computer, fixed asset, wrong. It depends on your usage of the asset. For example, imagine I am a dealer. I have a shop where I sell computers, where I sell mic sets. For me, this computer and mic set is inventory now, isn't it? It is inventory. In fact, if I am a real estate broker, I am, constructing apartments and I am selling them. Constructing flats and I am selling them. Do you think flat will be fixed asset in my books? No, it is inventory for me. So, try to understand basic one. Assets held for sale. These are inventory. Assets held for usage. Assets held for usage. These are non-current assets, or you call it property, plant and equipment, etc. So basically, try to understand the definition of PPE. Pavan sir, what is property, plant and equipment? One, it should be tangible. It is a tangible item. Why? Intangible items have another accounting standard. So if you are tangible item, welcome to 16. If you are intangible item, go to 38. If you are tangible item, come to 16. If you are intangible item, go to 38. You have another standard for you. You understand? So it should be a tangible item. To be categorized as PPE, an item should be tangible item. Point number one. Point number two. It is held for usage in production. What is that? It is held for usage in production. It is held for usage in production or supply of goods and services, or it is held for rental income. It is held for rental income. So you are thinking of giving this on rent, so you want to give it on rent to others. Okay, for renting purpose. This is second category. Third category is administrative purpose. Third category is administrative purpose. Okay, so held for, from that 3 arrow marks down, held for 3 arrow marks down, left side, usage in production of goods and services or supply of goods and services. Production or supply of goods and services. Second one is renting others. Third one is held for usage in administration. This is called administrative purpose. Held for administrative purpose. So this is basically the definition of property, plant and equipment. Okay, now we will deviate from accounting standard 16, IAS 16, and let me give you the whole universe of assets. The whole universe of assets can broadly be classified into some financial statement items, line items. Inventory. Okay, tangible assets, intangible assets, tangible assets, intangible assets. Then investment property. Then investment property. So inventory is there, tangible assets are there, intangible assets are there, investment properties are there. Okay, then the last one is contingent asset, but I am not writing contingent asset here because contingent assets are not qualified to be accounted for. So there is another category of asset called contingent asset also. CA is not current asset, CA is contingent asset. But contingent assets we are not writing, so for our purpose there are only 4. 1, 2, 3, 4. There are only 4 categories of assets. This is governed by accounting standard 2. This is governed by accounting standard 16. This is governed by intangible assets is governed by 38. This is governed by investment property is governed by 40. In addition to these things, another category if you want to write, you can write one more category, that is financial assets. One more category you can write financial assets. What are financial assets? Your investment in other companies, equity shares, preference shares, debentures, derivatives. These are called financial assets. Financial assets has three standards, 7, 9. These two IFRS and then 32. IAS 32, 7, 9, 32. These are called financial instruments. Financial instrument can be an asset or a liability. About financial assets and financial instruments, we'll see later. So these are the broad categories of assets. So an asset can be an inventory, an asset can be a tangible asset, an asset can be an intangible asset, an asset can be investment property, an asset can be financial assets. So the categorization of these things is based on the nature of the asset and intention of the management to use. The nature of the asset and intention to use. For example, a flat, an apartment, a building held for sale still is inventory. Pavan sir, I used this factory for 22 years. Today I want to dispose this off. That is non-current asset, but it is held for sale. That is called non-current asset held for sale. For that there is another standard, 5. Pavan sir, I bought one commercial complex. Just I have surplus money and I bought. My intention is never to sell this asset. But if the capital value appreciates, I will enjoy the incremental value, because the day when I bought it, it is $1 million. The building is $1 million. I wish it goes to $2 million, $3 million. I do not want to sell this asset, Pavan sir, but I want increase in the value. This is called capital appreciation. Increase in the value, capital appreciation. Or, Pavan sir, I purchased this building. This building has 20 shops. I give these shops, on rental basis, on lease basis or rent basis. My intention is just I'll sit at home, happily I'll collect the rental income, I eat, I sleep, Pavan sir. For rental income or for capital appreciation. If you are holding a property, that is called investment property. That is called investment property. Shares, debentures, bonds, fixed deposits. Okay, these kind of things are financial assets. Trade debtors, receivables, bills receivable, loans given, all these things are financial assets. So this is the broad category of all the assets. Today our agenda is to discuss this. Okay, shall we go to the material? This material will be given to you in the group. After the class, I will forward this PDF document to you. Don't worry about this. Just read the first part, definition. Property, plant and equipment are tangible items that are underline held for use, or in your book write down held for use. They are not held for sale. So like this. Tangible items held for use. In what you are using it? Either in production of goods and service or in supply of goods and service. Held for use in the production or supply of goods and service. Or for rental to others. You are giving it on rent to others so that you will receive some rental income. Or for administrative purposes. For example, right now, administrative purposes. What is administrative purpose? So, one biometric system is there. Biometric machine that takes staff attendance. Biometric machine that takes staff attendance. Okay, printer, air conditioners, generator set. For what all these things are used? They are used in administration. Very interesting thing is delivery van. Some student will say, Pavan sir, delivery van is not administrative purpose. Pavan sir, it is selling and distribution purpose. One student will say delivery van is for selling and distribution purpose. So if you read this standard as an idiot, administrative purpose, then only it is asset. Here delivery van is selling and distribution purpose, so not an asset. Are you kidding? Delivery van is also an asset. The word administrative purpose is very broad. It includes many things, not only your typical administration, which is functional classification. So in costing, you might have studied functional classification, production expenses, administration expenses, marketing and selling distribution expenses, research and development expenses. Beta, that is costing. Don't get confused between that terminology and this terminology. Here in accounting standard, the word administrative purpose is used in a very broad sense, which covers delivery vans, pollution control equipment, etc. So this is the definition. Part 1 is over. And most important thing, Pavan sir, I have purchased one asset, which is a tangible item, which is held for use in production. But Pavan sir, within 8 months, the consumption of the asset is over. So I will use this asset only for 8 months. Within 8 months, this will be exhausted. So after 8 months, there will be no this item. Remember one more condition: to be called as property, plant and equipment, it should be used for more than 12 months. It should be used for more than 12 months. It is typically called one accounting period, are expected to be used during more than one accounting period. So if you are, this is your accounting period. This is, say for example, year 1, this is year 2, this is year 3, this is year 4. To be qualified or to be categorized as property, plant and equipment, from the date when you buy, it should transcend some years, at least 2 years. Pavan sir, I have purchased one asset here, Pavan sir, and it exhausted here, I completed here. Then beta, it cannot be PPE. So any item which is acquired in one accounting period and which is exhausted in the same accounting period, which is consumed in the same accounting period, which is used within one accounting period completely, which is not carried to the next accounting year, is not qualified to be called as PPE. This is PPE. This is not PPE. That's all. Definition is over. Okay, now come to the overview, second para. Simple. What is the role of IAS 16? Go to IAS 16, knock the door. IAS 16 will open the door. Hey, who are you? Hello, I am accounting student. Dear IAS 16, what is your purpose? Why are you here? Then IAS 16 will tell you, beta, I am here. My purpose of life is to give accounting treatment of property, plant and equipment. Then you ask, hey, one more doubt. I don't know what is the meaning of accounting treatment of PPE. Could you please elaborate and tell what do you mean by accounting treatment of PPE? Then the standard will say, bro, don't worry, I will tell you. Accounting treatment means, remember, any accounting standard in the world, you call it IFRS, you call it US GAAP, you call it Ind AS, you call it accounting standard, you call it domestic accounting standard of any country. Okay, I have read and taught accounting standards. I have read and taught Ind AS. I have read and taught US GAAP. I have read and taught IFRS. So I have seen all the systems. You go to any system of accounting. Accounting standard means it deals with 4 things. Accounting standard means it deals with 4 things. Okay, it cannot deal with the 5th thing. So anything below this 4 only, accounting standard will tell you. First one is called recognition. This is called recognition principle. Second one is called measurement. Third one is called presentation. Fourth one is called disclosure. This is broader level understanding of an accounting standard. Any IFRS you take, any international accounting standard you take, basically accounting standard deals with recognition. What is recognition? When an item of ALEIE. Sir, what is this, sir? Asset, liability, equity, income, expense. These are called financial statement items. Whenever someone asks you, tomorrow you completed ACCA, or you completed diploma in IFRS, then you went to one interview. They asked you, hey, what do you mean by financial statement items? You have to say financial statement items broadly covers assets, liabilities, equity, income and expense. So if you observe, these three are there, no? These three, what are these three? Tell me. Statement of financial position, SFP, or you call it balance sheet. These two items are there, no? This is your P&L part, or you call it income statement. You call it income statement or P&L. So basically, these items put together are called financial statement items. So when an item can be recorded in books, so what is the meaning of recognition? Recognition means today, because it is the first session, I am starting with the basics. I never start my class with an assumption that student knows something. Even if you are a qualified chartered accountant also, if you are attending my class, I assume that the students require from the basics. Otherwise what happens? Maybe few students can understand even if I skip this kind of basics, but few students genuinely they are in need of help. Genuinely they do not know. After BCom they are coming here. That is the reason. Let me start with the basic nomenclature and terminology. Sometimes what happens when I say this is recognition, you might feel, I know this is recognition. I studied this in +1, +2, BCom also. I studied this in CA CMA also. I studied this in ACCA also. But my dear friend, I'll tell you one thing seriously. If I ask you what is recognition, that is, a very funny thing about the knowledge. If I tell something, you will tell, Pavan sir, I know this. But if I ask you the basic things also, sometimes you feel you know it, but maybe you do not know it. So it is always better to learn from the basics. So I am spending some good amount of time on the basics. Please don't worry. Only first class, first 1-2 classes only, I will teach this kind of basics. Otherwise, normally we'll go to higher level only. Okay, so recognition means when an item of asset, liability, equity, income and expense can be recorded in the books. That is called recognition. That means recognition is the timing of passing a journal entry. What is recognition? Recognition is timing of passing a journal entry. Then comes measurement. Pavan sir, then what is measurement? Measurement means how much? Measurement means how much. Say for example, you are speaking about purchase of a fixed asset. When you purchase a fixed asset, you know that the accounting is debit fixed asset account $1 million, credit bank $1 million. Okay, now passing this journal entry is called recognition. The timing of passing this journal entry is called recognition. This is called measurement. So when can I pass this entry is recognition. With what amount I have to pass this entry is measurement. Simple. So accounting standards deal with recognition, accounting standards deal with measurement, then comes presentation. Where will you present this item in financial statement? Where will you present this item in financial statement? Is it in the asset side or is it in the liability side, or can you net off asset and liability? How to show this? How to show this? I'll give you one simple small example, okay? I'll give you one small example so that you understand it. I purchased this pen. I'm a trader. I purchased this pen. How much this pen is? Say for example $1. Okay, so selling price of pen is equal to $1. Cost price of this pen, I bought it at $0.75. That means 75 cents. So I bought this with 75 cents and I sold it at $1, and I earned a profit of 0.25. So how shall I how shall I record this in my P&L? I am preparing my P&L in T-shape. I know P&L should not be prepared in T-shape. There is a separate pro forma for income statement. But for understanding, always it is better to use T-shaped P&L. Okay? Any country you are from. Pavan sir, I am not from India. I am from Brazil. I am from UK. Whoever you are, wherever you are attending this class from, T-shaped P&L is better always. Okay. So shall I write sales $1? Cost 0.75, therefore net profit is 0.25. Should I write it like this, or in my P&L should I write only one thing? Should I write only one thing? By profit 0.25, or you'll write income, net income. No, profit is this side. No, I'm sorry. So shall I write instead of writing all these things, shall I open my P&L account and write by income or net profit 0.25, or this is nothing but I am writing sales 1 less cost 0.75 and I am showing 0.25 on the credit side. So is this allowed or is this allowed? Obviously any LKG student also will say, Pavan sir, we have studied enough accounting in our life. This is wrong, Pavan sir. This is correct, because you might have seen this many times. If you are a trader, this is correct. But do you know, if you are a commission agent, this is correct. If you are a commission agent, your income is only net. You will not show, 1 rupee 0.75 paise or 0.75 rupees, or you will not show $1.75. You will straight write only $0.25. That's it. For example, e-commerce portals, Amazon will do accounting like this. Amazon will not do accounting like this. Infosys will do accounting like this. Microsoft will do accounting like this. Facebook will do accounting like this. Google will do accounting like this. But when you are working as an agent, a broker, and regular sales, you follow this. Sale of fixed asset. So, for example, fixed asset having a book value. Book value, we call it book value, carrying amount, written down value. Okay, this value of fixed asset is, say for example, $10,000 US. You sold it for $12,500 US. You should not write by sale of fixed asset 12,500 to cost of fixed asset $10,000 US, therefore to profit 2,500. This is wrong. This is for operating income. This is for trading income. This is for your regular sales. When this happens, you will not call it profit. You will not call it income. You will use the word gain. Gains are to be shown on net basis. You understand? Revenue is to be shown on gross. Gains should be shown on net. Don't you think these are very interesting conventions? So in your P&L, you cannot show, to cost $10,000 by sale of assets $12,500 to profit $2,500. You will write by gain on sale of fixed asset $2,500. How to present an item? How to present an item? If there is an asset and a liability in P&L, there is an asset. What is asset? Building. What is the amount of building? $2 million US. And I have taken a housing loan for it. Housing loan. Okay, which is $1.5 million. So should I show building as an asset on the right hand side, housing loan as a liability on the left hand side, or can I subtract 1.5 here and show 0.5? All these are presentation. All these are presentations. So accounting standards will tell you. Again, going back where I started the story, that accounting standards deal with 4 things. One is the recognition, second one is measurement, third one is presentation. Presentation means how to show the item in financial statements on gross basis or on net basis. How you have to show, that is presentation. Then comes a disclosure. Disclosure means giving more information to the user. For example, in your balance sheet, you have used one item, property, plant and equipment, 1.8 billion US dollars. 1.8 billion US dollars. That means you are saying in Indian currency some 14,000, 15,000 crore rupees of properties are there for you. Property, plant, equipment. In this, how many buildings are there? How many factories are there? How many vehicles are there? So you have to give the breakup. No, that breakup if you give in balance sheet, your balance sheet will run into 20 pages. So in balance sheet, you will use one line item, which will be elaborated in notes to accounts. So notes to accounts contains all the disclosures required, which will give information, describe, explain various items. That is fourth one. So basically accounting standards deals with recognition, measurement, presentation, disclosure. So obviously when you understand this, you don't need to by heart. Now read this. The objective of IAS 16 is to prescribe the accounting treatment for property, plant and equipment. The principal issues are 1. Recognition. 2. Determination of carrying amount. What is determination of carrying amount? Determination of carrying amount means measurement. And depreciation charges. Impairment. Depreciation, impairment, when you charge, then only you will get the closing balance. So depreciation and impairment losses are also measurement things only. After calculating and subtracting depreciation, you will get closing balance. Okay, and impairment losses to be recognized in relation to it. That's all. So when you read this, you should understand. Simply, they are speaking about recognition, measurement. Khatam. So recognition is there, measurement is there. That means what is the balance of an item of property, plant and equipment, and what is the depreciation charge, what is the impairment loss. That's it. Then there are some scope in items, there are some scoped out items. There are some scope in items, there are some scope out items. Pavan sir, I have one mineral ore oil rig where I am excavating some mineral. It could be iron, it could be steel, it could be copper, or it could be, oil, it could be something relating to petroleum or any other mineral. Pavan sir, is it property, plant and equipment? Pavan sir, I purchased 100 hectares of land for doing some agricultural activity. So I am thinking of, growing grapes, or, I want to make wines out of that, or something you are doing. Biological assets. Okay, Pavan sir, I have one item, 10 years I used the asset, like motor car. I have a car, but I am bored of it, Pavan sir. It is not performing well also. 10 years back it was, hot cake. I used to love it, but now it is not giving me that pleasure. I want to exchange it, Pavan sir. I want to sell it off and I want to buy a new Ferrari. So this is property, plant and equipment, definitely. Non-current asset, held for sale. So this IAS 16 said, dear non-current asset, if you are held for sale, please don't come to me. Go to 5. If you are held for use, come to me. Dear asset, are you a biological asset? Go to IAS 41, agriculture. IAS 41 we call it globally. Go to IAS 41. Exploration or mineral rights. Go to 6. There is one exclusive accounting standard for you, that is IFRS 6. Don't come to me. So these are called scoped out items. So read the content on the board, you'll understand it. IAS 16 applies to accounting for property, plant and equipment, except where another standard requires or permits different accounting treatment. For example, assets classified for held for sale. Assets classified as held for sale, HFS we call. It has IFRS 5. What is IFRS 5? Non-current assets held for sale and discontinued operations. Then if it is a biological asset, go to 41. If it is exploration and evaluation assets recognized in accordance with IFRS 6, don't come here, go to IFRS 6. mineral rights, mineral reserves such as oil, natural gas, similar non-regenerative resources. For them also, in some countries guidance notes are there, in some countries accounting standards are there. You understand? That's it. This is scope. Then put a star mark in your notes, put the heading recognition. Okay. So there are two rules on the board. Okay. Pavan sir, when an item of PPE, when an item of property, plant and equipment be recognized, the standard uses one word. Okay. If and only if. When and only when. These two phrases means there are conditions. An item can be recognized if and only if. An item can be recognized when and only when. These two phrases used in accounting means there are conditions. What are the conditions to recognize an asset? One is FEB test. It has to pass FEB test. What is FEB? February. No, FEB stands for future economic benefits. Future economic benefits. So I have a laptop. Will this give future economic benefit to me? I have a desktop here. Will this give future economic benefit to me? I have a whiteboard here. I have a studio setup here. I have a camera here. I have another camera here. I have mic set here. I have furniture here. So I have to ask one question: whether this item is going to give future economic benefit to me. What is future economic benefit? Either cash flow. Directly it will give cash flow, or it will help in generating cash flow. So will this camera give cash to me? Directly may not be, because I'm not selling it, I'm using it. But by using this computer, I'm recording a class and I will sell this class and I will get some economic benefit. AC is there. AC. When I switch on AC, will it give currency notes? Dollar bills will fall? No. No cash flow like that. But that is used in the business to generate cash flows. This is called future economic benefit. Future economic benefit need not be only cash flow directly. It is helping in generating cash flows. Ha, Pavan sir, you have laptop. This will give you future economic benefits. That is test 1. Now test 2. Test 2 is called measurement test. Measurable in terms of money. Money measurement concept. Is it measurable in terms of money? I used to ask this funny question in basics of accounting class. Okay. In basics of accounting class, I used to ask this kind of question. Many students will be there. Sometimes in class 200, 300 students also will be there. We'll give randomly mic to someone and then we ask, hey, is brain an asset? They will say, can any person use brain to earn money? Every person uses brain only to earn money, no. For example, I have knowledge and I'm using that for my earnings. My bread and butter comes out of my brain only, no. But when I prepare my balance sheet of Pavan, can I say brain, non-current asset, held for usage? Not held for sale. My brain is not held for sale. I cannot sell it. It is held for use, non-current asset, more than 1 year. Tangible? Tangible. So can I say, accounting will ask one question, idiot, how can you measure this? It fails, money measurement concept. Even internally generated goodwill. That fails measurement concept. How can you measure it? Valuation principles can be there. That is different. Valuation principles can be different. Pavan sir, we can value brand. I know. Pavan sir, we can value goodwill. I know. Pavan sir, we can value financial instrument. I know. Pavan sir, we can value rights and obligations. I know. Pavan sir, you have entered into a contract. That contract value we can calculate. Yes, I know. I know valuation, but brain cannot be valued. You cannot express it in terms of money. This is condition 2. So, whenever you have an asset, say for example, this asset is there, AirPods, check 1, will it give future economic benefit? This is a personal thing, that is a different story. So, take computer, will it give future economic benefit? Yes. Can it be measured? Yes. Now you can recognize. And I'll tell you one very interesting secret, okay? Don't tell anyone, secret. These 2 conditions are there, no? For inventory, it is required. For property, plant and equipment, these 2 conditions are required. For intangible assets, required. For investment property, required. Any asset to be recognized, these 2 conditions are to be satisfied. You might have studied this. I'm sure you might have forgotten already. These 2 conditions are not coming from IAS 16. These two conditions are coming from where? Our Becker textbook, sir. Idiot, not Becker or Kaplan or Cap classes. Which textbook it is coming from? It is coming from the framework for preparation of financial statements. You remember there is something called framework for preparation of financial statements. There it is said to be classified as an asset, it should give FEB to you and it should be measurable. Khatam. No more discussion. So read this. Item of PPE should be recognized as asset when it is probable that 1. It is probable that the future economic benefits associated with the assets will flow to the entity. Inflow. Because it is my asset, I will get inflow of cash. 2. The cost of the asset can be measured reliably. Measurement. Pavan sir, what if I have an item but it fails either test 1 or test 2, or it fails first test? If it fails second test, you cannot recognize the asset. Pavan sir, 4 years back, it satisfied both the conditions. I recorded the asset in my books. But today, there is no probable future economic benefit from this, Pavan sir. Probable here means without loss of generality more than 50%. What is the meaning of probable here? Okay, in IAS 37 we'll discuss more about probable obligation, possible obligation, present obligation, contingent liability. That discussion we'll do later. But normally when it is said probable, it is more likely than not. That means more than 50%. Now imagine you have recognized as an asset one item. After 4 years you realized this product has no future economic benefit. Then it should be charged off to your profit and loss account or income statement. You have to write off the asset. It cannot be asset. It is no more asset. It was asset, but today it is no more asset. Charge it off to P&L. Write it off. This is recognition. Okay. So this recognition principle is applied to all the PPE costs at the time they are incurred. These costs include costs incurred initially to acquire an asset or to construct an item of PPE, and cost incurred subsequently to add or replace part of it or service it. What they are saying, the cost of the asset includes 2 things. What they are saying in this point, cost include 2 things. Cost to 1, acquire in case of purchased asset, or construct in case of internally constructed asset. I can buy building, I can construct building. So cost to buy building, cost to construct building, plus directly attributed cost. What is DAC? Directly attributed cost, like installation kind of things you will capitalize, no? Stamp duty, legal expenses, registration charges, trial run. These are called directly attributable expenses required to bring the asset into its present location and condition. So this is day 1. Then, Pavan sir, I bought one machine 5 years back. I capitalized all the incidental expenses. It is shown in my books at $1.4 million. Very good. After 5 years, Pavan sir, I am replacing a major component, or I am doing major inspection or overhaulage. Based on certain conditions, these can be capitalized and include it in the, it is, you know, year 5. This is day 1, this is year 5. So for this I have spent 0.6 million US dollars. In my books now, today, asset will appear at $1.4 million plus $0.6 million minus accumulated depreciation minus accumulated impairment loss. So this is to be added. That is what they said. Now you read this, you will understand clearly. So this recognition principle is applied to all the PPE cost. At the time they are incurred, that means day 1. These costs include cost incurred initially day 1 to acquire in case of purchased asset, to construct in case of internally constructed item, and cost incurred subsequently to add, to replace or service it based on certain conditions. Day-to-day service is there, no regular service, you should charge it to P&L. Regular service, repairs and maintenance you cannot capitalize. There are certain servicing costs, there are certain overhaulage costs which can be capitalized. That we'll see later. So this is basically first one. Now, initial measurement. Based on this, problems can be asked. Based on this, problems can be asked. So Nirmal, can you turn on the mic and study the, read this please?
Yes sir.
Yeah.
Initial measurement.
Be little louder. Be little louder.
An item of property, plant and equipment should initially be recorded at cost.
Okay.
Cost includes all costs necessary to bring the asset to working condition for its intended use. This should include not only its original purchase price but also costs of site preparation, delivery and handling, installation, related professional fee for architects and engineers, and the estimated cost of dismantling and removing the asset and restoring the site. IAS 37 provisions, contingent liabilities and contingent assets.
Superb. Next.
If payment for an item of property, plant and equipment is deferred, interest at a market rate must be recognized or imputed.
Very good. Next.
If an asset is acquired in exchange for another asset, whether similar or dissimilar in nature, the cost will be measured at the fair value unless the exchange transaction lacks commercial substance or the fair value of neither the asset received nor the asset given up is reliably measurable. If the acquired item is not measured at fair value, its cost is measured at the carrying amount of the asset given up.
Very good. So all of you guys read this again. Read this 3 bullet points again. There is lot of information in this. We have to solve problems also. Please read this carefully. We'll solve problems now. Okay, so shall we start? Line 1 says an item of PPE initially should be recorded at cost. So look here. Recognition and measurement. From this 2 arrow marks down. Initial recognition, subsequent measurement. This is what is initial recognition. Initial recognition means on the date of purchase. on the date of acquisition of asset. Subsequent measurement means next balance sheet date, reporting period, end of reporting period we call. Subsequent means next balance sheet date. Okay. Okay, now here it includes 3 items. So it should be only on the initial recognition, it should be only on cost. Cost includes 3 items. Cost includes 3 items. What are they? Cost include 3 items. One, purchase cost. Purchase cost. Okay, less rebates. Okay, less rebates, and here settlement discount, prepayment discount are to be ignored. Don't consider. Ignore them. Take them to P&L. No. Pavan sir, what is this? I'll tell you. Don't worry. Settlement discounts, prepayment discounts should not be considered here. Refundable or returnable taxes. Refundable or returnable taxes. No. Don't include them. Pavan sir, what is refundable or returnable tax? Now imagine I have imported one machine and I paid 10,000 US dollars customs duty. I will not get the 10,000 US dollars back. In any manner, I cannot get it back. That can be added to cost of the machine. But if I have purchased machine in India and I have paid 10,000 US dollars towards GST within a country, in India we'll pay in rupees, but because this is a global course, I'm giving US dollar example. 10,000 US dollars of VAT paid or GST paid, that can be taken as a credit, isn't it? That can be taken as credit. So if you have paid any kind of tax, you call it duty, you call it cess, you call it tax, you call it some other kind of statutory fee, if it is refundable, returnable, don't include that in the cost of the asset. But if it is not returnable, you have to include. This is one. Purchase cost. This is purchase cost. Two, cost directly attributable, DAC, directly attributable cost to bring the asset into its intended use. Pavan sir, to use this as per my intended purpose, I need to spend this amount also, capitalize. These are called incidental expenses, to put the asset into its present location, condition and intended usage. Intended usage. For example, you purchased a building. The building is $2 million. But after that, you have dismantled the entire floor because in one floor, 8 rooms are there. But you don't want 8 rooms. You want one big hall. You want one big hall. So you are dismantling all the 8 rooms and you are doing interior. Oh, sir, can I capital? Obviously, yes, because that is required for its intended use, because you are thinking of using it for some banquet hall, some function hall. So that 8 rooms should not be there. It must be a very big hall. So for your intended usage, if you are incurring some cost, that can be capitalized. 3, installation charges. Here, installation charges. Okay, statutory fees, registration charges. Then transportation charges. Okay, fee paid to architect, fee paid to engineer, etc. All these things can be capitalized. Third one is put a star mark. 3, decommissioning cost. Decommissioning cost. IAS 37. Ready with IAS 16. What is the decommissioning cost? What is the decommissioning cost? Now, right now, I have occupied one building, or the better example is, you know, this power plant. Best example is power plant. Okay, so I'll use this for 25 years. After that, I need to dismantle the plant because I have taken government site. I need to give the site back to government now. So I need to dismantle and I need to remove this plant from there, and I need to give the land in the shape in which they have given it to me 25 years back. So I have some construction which I need to demolish, dismantle, decommission, and then I need to give the asset in the same old condition to the owner or to the government. So after 25 years, I know that I will be incurring $5 million cost. After 25 years, I have to dismantle this, and the estimated cost is $5 million. So the present value is to be calculated. How do we calculate present value? Present value is equal to future value divided by 1 plus interest whole power n. Assuming that interest is 5%, you have to take $5 million divided by 1 plus 0. I am assuming 5% interest rate. 1.1 plus 0.05 whole power 25. When you calculate this, it is called present value. So you have to calculate present value of the liability after 25 years, because though I incur this cost after 25 years, today I have to record this in my books now. When will I incur the liability? After 25 years. But when I have to pass journal entry? Today. That is the reason you are bringing it to its present value. So the present value you calculated, imagine it came to that 5%, this $5 million present value came to, say for example, $1.6 million. Only for example, it could be different. I am not calculating this because my intention is not to prove arithmetically. My intention is to explain concept. So imagine the present value is $1.6 million. This is present value of your future liability. So a provision should be created for. So that provision should increase the value of asset. You will write the journal entry like this: debit asset account $1.6 million. Credit decommissioning liability $1.6 million. This is what they have theoretically written in the sentence I have explained you with a numerical example. So what is this? You have an asset. Step 1, you have an asset. After a few years, the asset is to be dismantled or decomposed or decommissioned, and you need to remove it. For that, you will incur some cost. Material, huge cost. If it is 1 rupee, 2 rupee, $1, $2, you will not do this accounting. Material amount. And then there is so much of difference between today and the future period. Then step 1, estimate the future value of decommissioning liability. Step 2, bring it to its present value. Then step 3, bring it to its present value. Then step 3. What is step 3? Step 3 is capitalize that liability to increase the value of the asset. Asset will be increased, liability will be increased. So this asset component 3, how many components are there? 3 components. First component is purchase cost, second component is directly attributable cost, third component is decommissioning cost. Decommissioning cost is both an asset and a liability. Okay, why it is asset? Unless you spend that amount, you cannot use this asset today. Government will tell you, if you are constructing power plant here, you have to remove this condition. Otherwise, I cannot start power plant. So that $1.6 million is an asset. But after a few years, I know that I have to spend that money. So it is a liability. So you will pass this journal entry: asset account debit, liability account credit. So this is the third component of cost. So cost includes 3 items. This is initial recognition: purchase cost, directly attributable cost, decommissioning cost. This is on day 1, initial recognition. Only cost. Subsequent measurement, 2 models are allowed. For subsequent measurement from next balance sheet onwards, two measurements are allowed. One is cost model. Second one is revaluation model. So you can choose, you can elect either cost model or revaluation model. You can elect either cost model or revaluation. In cost model, how to value? In revaluation model, how to value? All these things will come in the next phase. You understand? Okay, so we'll do some problems also, both on initial recognition and subsequent measurement. We'll do it. But before we log off today, I'll send you this paper, no? This document I'll send now. So in this, this problem is there. Question number 2. AB Limited has recently acquired an item of plant with the following details. List price $480,000. Trade discount 12.5% on list price. Related cost, transportation cost, can we capitalize it? Pre-production testing cost, can we capitalize it? Repairs and maintenance contract for 3 years, 48,000. Put a star mark. Repairs and maintenance, 48,000. Site preparation cost, electrical cable placement, 28,000. Then foundation cost 9,000, labor cost 15,000, total 52,000. So out of all these things, you have to calculate what is the amount that is to be included in the cost of the asset, what is the amount that should not be included. Then AB Limited paid for the plant within 4 weeks of the order, therefore obtained an early settlement discount of 3%. This is your financial management. Financial management. What is financial management? Your supplier has to get some $4.8 lakh or $0.48 million US dollars from you, correct? $4,80,000. He is running short of funds. He called you and said, hey bro, you bought one asset, please send cash now. You said, but boss, you said I can pay within 6 months. Then he said, hey, little urgency is there. Pay within 30 days, pay within 4 weeks, I'll give you extra 3%. Then you took the calculator. You are also a smart guy. Where is calculator? Hello, calculator ji, where are you? You took calculator and you calculated 4,80,000 into 3%, how much? Then you thought, oh my God, $14,400 you are getting discount. Then you said, okay, pay it off. So you paid by way of a check and you got $14,400 or $1 or $1 lakh or $1 million. Some settlement discount you earned. Remember the rule. Settlement discounts for making early payments should never be included in calculation of cost of asset, either as an inclusion or as an exclusion. Trade discount, yes, it is related to this. Trade discount is there, no, it is related to purchase of asset. But this 3% discount is not related to purchase of asset. This is related to payment, but not acquisition. This has no connection with acquisition. So this 3% shall not be included. You understand? Then AB Limited had wrongly specified the power loading of original electrical cable to be installed by the contractor. The cost of rectifying the error is 12,000 and is included in the above figure 28,000. Remember the rule. Any abnormal cost because of your inefficiency, because of your carelessness, because of your irresponsibility, because of faulty design, because of avoidable clashes with laborer, anything that is avoidable becomes abnormal. Faulty designs, fight with laborer, inefficiency, or irresponsibility, carelessness, because of this some cost incurred. That cannot be included in the asset. That should be a loss. Charge it to P&L. Then the plant is expected to have a useful life of 20 years. At the end of this period, there will be compulsory cost of 30,000 to dismantle the plant and 6,000 to restore the site to the original condition. Component 3, decommissioning. Calculate the value at which the plant will be measured at initial recognition in the financial statements of AB Limited. Solution is given in the document, but be a good student. You are not allowed to read the solution. You are not allowed to read the solution. Read the question, take pen and paper, solve it. After that, check the answer. It takes hardly 5 minutes of time. Okay, if you can understand this, very good. If you are unable to understand, in the next session, anyway, I will explain what it is. Simple. Okay, you understand? This is a problem on initial recognition, on the date of purchase. On subsequent measurement, we'll have cost model, revaluation model problems. That we'll see later. So this is a problem on initial recognition. So that's all for today. Any doubts you have, please ask me. If you do not have doubts, first session is over. We'll see the balance in the next class. So Bolo, any doubts you have?
Yes, I have one doubt.